either way.
Okay.
Hi there. I'm Susan Glickman. I'm the Vice President for Policy and Partnerships at the Clio Institute. And I'm here with Juan Andrade from the Solar and Energy Loan Fund, SELF. And we're happy to be together to record a session for Florida Climate Week. And thanks very much to our friends at the Volo Foundation who sponsor Florida Climate Week and help bring all this important information together about our climate and all the good work that's going on out in the community. SELF is out there leading, and we're going to talk all about that today. So, Juan, thank you so much for spending some time this morning.
Well, thank you, Susan. It's an honor to be here. Again, appreciation to everybody organizing these important events so that we can talk about what we're actually doing on the ground with access to capital to help address the issues that we all care about so much. Climate resiliency, and in our case, really focusing on low and moderate income households and what it means for them and all of us to face what we see is happening every day, which is an climate change and climate impacts. So thank you for having me and SELF here at the table today.
Well, I love what SELF does. I'm evangelical for SELF. I'm also vice president of the board, and I'm very, very proud to be part. What Solar and Energy Loan Fund is doing is just nothing short of amazing. And for a very long time, when I think about a utility company and what they sort of have over, all the customers, which is they build a power plant and they put it on your power bill and you have to pay for it. That is a form of financing. So I've always thought that financing is the secret sauce. So I'm going to ask you just to start a little bit on the history of Solar and Energy Loan Fund. And when you all provide affordable financing, especially for lower income people, it's a game changer because you then can, just like we do with our homes and our mortgages and our cars, you can finance that over time. And that gives real power. And of course, people who are at the lower end of the income spectrum have a more challenging time. So, but that's what SELF does, the heart and soul of it. So talk a little bit about the history of SELF and how things got started, and then we'll bring it up to date.
Yeah, thank you. So I guess that before I dive into a little bit of our history, I just really want to just send out a message to everybody out there that was in the path of Helene. Is it Helene?
Hurricane Helene.
Yes, the latest hurricane, because our hearts and minds are there with everyone. And we're right now, as we speak, trying to figure out how we can help with capital, because this is kind of leads right into our conversation today, Susan, because what you're saying is so true in many ways, that capital is the key to unlock opportunities to be able to better withstand the inevitable impacts that we're all suffering. And lack of access to capital is what keeps people in a poverty cycle, which causes so much damage and additional costs and having to repair, rebuild, and some people never recover from these impacts. So I just wanted to start by acknowledging that a lot of people out there in this moment are struggling and trying to figure out how to recover from this, and how are they going to get the capital to be able to repair or rebuild or just start anew. So this kind of leads into why SELF exists. SELF was created in 2009 by the St. Lucie County Commission. Doug Howard is the founder and led this initiative to apply for a grant from the Department of Energy. Back in the ARA days, this was the previous stimulus package that Obama put out after the housing crisis, the housing crash. So you can imagine Florida being a state where, building and has been going on for decades in terms of the fuels growth. And it's just part of what happens all the time in Florida, building, building, building. And this whole sector crashes with the housing market situation, and people are left without jobs left and right. And the big question was, how do we recover from this crisis? So Doug Howard and a team of commissioners set out to create a clean energy fund, really to create jobs that were going to be sustainable in the future. Because um, he knew, Doug at the time was ahead of the curve, like many of us that are today in the sector, like yourself, Susan, where we were already very much tuned in with the intersection of climate, with housing, with health, with businesses. I mean, this climate issue, which was treated in a silo separately, we saw the interconnections and knew that we had to connect capital with climate issues and also focus on a workforce that would go into the future. So SELF is created with a small grant, $3 million. I mean, there were 20 local governments across the state that were selected for a grant that would set up revolving clean energy funds. And I think that we were the ones that got the smallest grant. So half of the $3 million were to set up a revolving loan fund, $1.5 million approximately, and the other was to set up the program in 3 years. So fast forward to 2010, SELF is getting started, and it's like, okay, but we're in Florida, right? Oh, can we do clean energy? I think of the cost of solar at the time, the cost and the lack of incentives. And of course, climate change, it doesn't exist. So why would we even care about this issue, right? So, um, so it was evident that we had to focus on setting up a revolving loan fund that would address the issues that people cared about the most and had the most impact in that moment, which were prepping homes for clean energy, helping reduce energy costs by focusing on energy efficiency, helping people change their roofs so they would be solar ready and also they would be more wind resistant. And then we thought about the whole house. Like, what else do people need? They need to protect their homes. So let's do wind mitigation, impact windows, doors, hurricane shutters, everything that helps make a home more resilient. So with that $1.5 million, a loan fund was created. And at the same time, we created a process by which we would pre-vet the contractors, because the other issue that we saw was happening was not only the fact that we needed to address climate issues and resilience, but also we needed to address the issue of contractors and their reputation, unfortunately, and protect consumers. Many of our clients to this day, in fact, over 50% of our clients are elderly people, perfect targets for scammers,
Mm.
women, a second group of clients. So the fund was set up in a way that consumer protections were at the top of mind. So contractors get pre-vetted, go through an approval process, have to comply with a project management process. We approved somebody, we created a micro lending program where we would approve unsecured loans for people with low credit scores and lower incomes based on ability to repay, not on credit scores. So we would also promote financial inclusion. So you now have access to a loan, but now you also have access to a pre-vetted contractor list that you can choose from. We ensure the whole process and project gets done, and then we pay the contractor when we go through all the compliance issues.
Yeah, no, I love that. I think I want to underscore this because it's really important. So in Florida, we did pass legislation that allowed a program they call Property Assessed Clean Energy, where you can do improvements, but it goes on your tax bill. And that is ultimately a lien on your property. So the fact that the loans itself does are unsecured loans is super important. And we want to make that really clear. Number two, that you're loaning about on the ability to pay and not necessarily credit. And I know you could talk about a few stories and things that illustrate that. But some people don't have credit. It's not because they were bad or defaulted necessarily. They just maybe didn't establish credit at all. And then there was one other thing that you said that I thought so important to underscore is that we have these solutions. Like, people don't know. And I know in the early days of self, it was really more focused on energy efficiency or roofs or air conditioners. And I know in, my work over the last couple decades, I recognize that we can say things now about the affordability and financeability of solar that we couldn't have said 3 or 4 or 5 years ago, right? So originally solar was too expensive, but now it's a big part, and we're gonna dig into that a little bit more. So mention a little bit, because this contractor base, and it's not just, I mean, part of it is the safety, but it's like having your uncle or your big brother kind of look over and make sure that you're getting a fair price. Who doesn't need that kind of help? But I think that's really, really special. And especially since you're creating all these jobs and building this contractor base. So you've got workforce in there, right? And you're being kind of the big uncle, the helpful uncle. So anyway, talk a little bit more of some of those loan programs that you have.
Yeah, thank you. Really important points that you highlighted there. Thank you. One of them is that with our we call it the Green Home Loan Program, which is this micro lending program that addresses all those issues that I talked about before. Nobody's going to lose their home with us. We're taking all the risk. And just like a little bit more on how and why we do that is because we raise capital from the private sector and philanthropic sector. We have no state funding. Let me underscore that we are a nonprofit community development finance institution known as CDFI / hybrid green bank. And I want to take a minute to explain, when people ask, what is SELF? We are a community green bank, basically. What does that mean? It means that we're nonprofit. So we are certified by US Treasury. So anybody who doubts the legitimacy of us, we have audited financials for the last 13 years, clean ones. There's like all sorts of information out there on us that's available. Number two, we're a green bank, not because we're state funded. We have zero state funding. And unlike Connecticut Green Bank or green banks in other places, Florida, like other states across the South, has no state funding for these green banks. So there is a type of green bank that we represent, which is an independent nonprofit green bank. And bank is a little bit of a misnomer. We're all loan funds. What that means is that 100% of what we do is focused on climate, right? So there may be now with the IRA funding, there are CDFIs and credit unions and all sorts of banks. There's a Climate First Bank that is a regulated bank. I mean, all of those are participating in this space of financing climate, but we're the only ones that are this combination of 100% nonprofit and 100% focused on climate at the intersection of health, affordable housing, financial inclusion. I mean, all these things that we touch. And number three, 100% focus on low and moderate income populations. So just setting that stage, we're able to raise capital from impact investor, faith-based organizations, bank CRA investors, et cetera. So we have a combination of capital that allows us to put out more flexible products than others would under a regulated, like SEC regulated, because we're not taking people's deposits and putting them at risk. We're also not doing loans that will risk people's homes, that they will lose them. So we're able to provide this flexible lending. We have our proprietary underwriting methodology that now we're actually expanding with nationally. And what that does is allows us to really gauge what somebody can repay so that we set them up for success. We rebuild credit as they're repaying us, advancing financial inclusion and expanding opportunities for them to access more financing. And a lot of people doubted what we were doing at the beginning because to your point, it was like, well, energy efficiency would need 12 years to repay itself. Well, we were like, we do climate financing through a human-centered lens, meaning, do people really think about, does this pencil out? No. When your AC goes out, it's 102 degrees in your home, you need an AC to be
That's
able
right.
to sleep well, to be able to, when your roof is leaking, do you do the math of how long it's going to take you to repay it? No, you need insurance. You need to replace that roof. We know those are the priorities of the people. We also know our priority is decarbonizing. So we do that intentionally through going through the human aspect of the needs of a household. So somebody takes out a loan with us, we we take the risk, but we underwrite prudently. So we're very proud of the fact that 72% of our clients, which are homeowners, 72% are low and moderate income. And we have an average of less than 2% default rates. So
Wow, that's great.
yeah. So when people question, well, what do you mean you're doing, like, first of all, you're doing consumer loans, unsecured loans, with no, so people assume, oh, you must be expensive. No, we're at about a third of market pricing. Number two is, oh, are people going to be losing their homes? No. And we can't compare a consumer loan to a mortgage loan, by the way, right? Pricing is different. And number three, it's like, oh my gosh, you guys must be losing a bunch of money because you're lending to the sector that is not credit worthy. Well, wrong. People in low and moderate income communities are credit worthy, and that's what we're proving, and we're really proud of that.
I think the fact that that self is mission driven
Yeah.
is everything. And then it's providing affordable financing to the very people that would get the most expensive financing, right? They are literally having to credit card for a new roof, right? So
Yeah.
you're reducing the emissions, you're making a tighter envelope, it's healthier. I mean, so many people have asthma and or respiratory problems or vascular problems. And so you're creating a healthy home. So much opportunity there. And I love that you're rebuilding credit for people. So talk about some of the evolution of some of your loan products,
Yeah.
moving to commercial loans and septic to sewer.
So exciting. So we started with this micro lending program with small loans up to $25,000 for homeowners, right? Based on ability to repay. That's our Green Home Loan Program. It's our flagship program. Available across the state, by the way, and in 11 other states right now through plug and play partners.
That's exciting.
Yeah. So then we realized we needed to do more and we needed to help build green homes. What do we mean by green homes? Homes that are more resilient, that are energy efficient, and that are ready to solarize, not necessarily maybe from the get-go, but now we have this golden opportunity that we'll talk about to solarize those homes, right? But we knew that we had to make it work. We had to make the math work so that we could upgrade the quality of homes. So one of the things that we push back on or challenge always are these kind of paradigms and status quo situations. Like affordable housing has to be affordable to get into. But what about operating the home? What about the build of the home, right? So we decided to create a new program called SAGE, which is our newest new construction program focused on small to mid-size developments led by minority, female, or novice developers. So one of the things we found is that, I mean, big developers doing affordable housing, LIHTC deals exist. But then there's a space when you drive around communities. First of all, there's a lack of affordable housing or workforce housing. Second of all, there's, lots and dilapidated homes and neighborhoods that could be rebuilt. And the question is, why aren't they being rebuilt? Why aren't they building in those lots in those communities? And the reason is capital, lack of access to capital. So many people own or have generational wealth, so they'll own a lot, but they can't build because they're not developers. Nobody will lend to them. So we decided to create a program where we train, provide technical assistance, and walk a novice developer, a woman who owns this lot that her father, owned, that the uncles, whatever. And they want to build and they want to become landlords and they want to build wealth for themselves, but they want to serve their community with housing. So we help them build. We provide that upfront financing, pre-development, gap funding, construction funding. We help them get a permanent financing. And where there are gaps of 20% equity or whatever, we step in and we plug those gaps. And I'm super excited to share that we just closed about $5 million this past year in new developments. And one of the developers that we supported, a female Black novice developer with a company called Affordably Lavish, just finished 2 homes. And yesterday we found out she already sold one of those homes. So
Oh, wow, that's
homes
great.
are resilient, green, efficient, and now the next step is going to be to solarize them. So happy to share more on Sage with whoever wants to reach out. And then we have another program that is our septic to sewer program. This is with Martin County. It's an on-bill financing program, so the utility collects for us, but we provide the capital for people to connect to the sewer system. So again, this is a really cool public-private partnership type of example where
Yeah.
the utility builds out the sewer infrastructure, but then people have to connect. Each one of those connections cost $7,000 to $10,000. Where do they get that money from? We did an agreement with Martin County, and one of the things we're good at is leveraging capital. They had $200,000. They thought they would do 20 projects, 10,000 a pot. And we instead said use 200,000, provide a discount on the projects to 200 homes, we'll bring in $2 million. We just surpassed $1.3 million in financing for that. So we leveraged their 200,000 10 times. And really exciting program, which is now going to be
Let me
growing.
stop on the septic to sewer because there is such a climate element, right? Because as our seas rise and we're seeing sunny day flooding, you're talking about the septic to sewer adds to our red tide and blue-green algae problem. So it's just really terrific. And I love the sort of just thoughtful way that you took, this relative small amount of money and you're expanding it. I know St. Petersburg is excited that SELF is going to be helping to finance. City Council member Brandy Gabb was talking to me about that just the other day. So I just think it's amazing. And septic to sewer conversions are such a need. And if I remember correctly, you're loaning over the course of about 10 years is the finance, and it was somewhere about $83-$85 a month, something people can afford as opposed to having to come up with $10,000 up front. I'm not sure if I have those numbers accurate.
Close enough. I think that you make the point of affordability, right? So what we did is we actually reverse engineered the financing. In other words, the utility told us that they had done a study and people were comfortable paying $75 to $78 a month for this. And so we created a loan that fit that amount. So these are the things that this is why I love my job. And this is why Doug and I do this job with so much passion, because we get to create solutions, real solutions to the problems and meet people where they're at. It's just a matter of having more capital to do more.
Yeah, it's great. And I want you to blend a little bit of that, because one of the things I think is so interesting is that particularly in the early phases and still you're getting loan capital from a lot of places, but one place are with religious institutions in their own, I guess, pension funds internally, right? They're investing in self. I love that personally, but if you want to speak to that, and then we'll go everything a little more current.
Yeah, it is incredible. And I have to say that it is the nuns. And thanks to the nuns that we are here today. I mean, once the program was created, we had to survive. I mean, going, that short history that I talked about. I mean, with $1.5 million in 3 years, to set up, then what? everybody thought we were going to go under. I mean, I joined in 2013 and, started working on the underwriting methodology, and people would come up to me and say, "Oh gosh, I hear that your background is microlending, blah, 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 but Self's not going to survive, right? Right?" And I was like, "Well, just watch us. We'll make it work." And so the nuns were the first ones to invest in us post grant. So it was like small investments, small for us today, but at the time are huge, of $100,000, $150,000. And what they do is provide flexible capital. And that means that they loaned us the money, lent us the money at, a low cost. We paid interest only. And so it allowed us to breathe, to revolve those funds. But it was like 3 years, 5 years. Well, today, most of our investors, except the ones that have decided to shift and pivot to another strategy that's not investing, have renewed with us throughout the years. One of our funds started with $200,000, now has $1 million invested in us. That's one of the big ones. It's Mercy Partnership Fund. The other ones, we have investments as small as $20,000, $50,000 from the nuns. 13 faith-based organizations kept us going
Wow.
and helped us legitimize and survive as banks started to look at us and say, okay, we'll do a CRA investment. And this is one of the things that is also important to note. We're not a granting program. We are a financial institution. So we have to have very prudent practices and good practices. And serving low and moderate income populations with loans requires us to really tap into that ability to repay, not overextend ourselves or them, but also really is proven to be a national model now for working in these communities in a way that's sustainable in the long run for us as an organization, but also for people rebuilding their credit. We have customers that have come several times through the program for a roof, for an AC, and are doing this like step up process. So again, the capital that we rely on is a combination of some grant funds. But I do want to say, most people think that, oh, we have all this federal funding and then we're just doing all this crazy stuff. It's not like that. We have about 16% of our total capital is federal funds. And those federal funds come from the CDFI fund that we compete for every year. And sometimes we win and sometimes we lose. And this year we didn't get anything. So we don't rely on federal funding. We are a model that combines private, public, and I call them the 3 Ps of capital: private, public, and philanthropic capital, to be able to make things work. So it's challenging, but it also allows us the flexibility to tackle these issues with creative, innovative programs. So I don't know if I'm excited to jump into the
You're doing
commercial.
great.
Well,
I'm going to flip into some of the newer funds, but one of the things that I find so striking about Self and how Self operates is typically with your core green home loan programs, you come into a community and you partner with a local government, for example, and they will provide dollars to basically hire a loan officer in that community for someone to deploy those funds. And one of the things that to me is the most spectacular, sort of core things about Self is that once you're working in a community for, let's say, 3 years, you've written enough loans that you then don't have to come back to that local government and ask for more money, because you're then paying for that loan officer with the interest from the loans. Like, there are very few entities, particularly of a nonprofit, that don't come back every year to their funders and so forth for more money. So I just think that's just a spectacular quality and a great story. So maybe speak to that for a minute, and then we'll kind of bring things more current.
sure. Our goal is to be self-sustaining, 100%. CDFIs in the industry typically operate at a 60% self-sufficiency rate. We are hovering at around that rate right now because we've made so many upfront investments with grant funds, philanthropic funds to improve our technological systems to scale and grow. So we operate a business model in a nonprofit sector with a mission, right? So we, again, as you said, we don't like to be reliant on any source of funding that will grant us every year. We do every year go after some grants to cover some operating gaps. And that's the way to grow, that there's no other way. So instead of equity investors that would be in the private sector, we have philanthropic investors that help us invest in capacity. And, that is how we now have an amazing team of professionals. Like, that's the other thing is initially we could have gotten away with, some volunteers and some really goodwill people that wanted to help us. But as we grow and manage money, other people's money, then we have to professionalize, right? So our staff, they're professionals. They come from the banking world. They have finance experience. They have different experiences. But my point is that we pay fair wages, we pay competitive wages and provide benefits and all that, because all of that is part of our vision to make this organization sustainable and an organization that will serve communities in perpetuity. It's, this is not about us. And because nobody owns a nonprofit, this really is about the mission. So that's the goal. The goal is every time we partner or we have a grand tour, we want to put those dollars to work in a way that produces something that will allow us to improve our self-sufficiency and that we are not reliant on grant funds.
Yeah. I love that you are institutionalizing a program kind of forever, right? That will always be there. And, it's, we've got so many inequities built into our system. And the idea that it's kind of like, people who already have affluence, they can get easy capital, low interest capital. But the people who need it the most, are getting the highest interest rates. And it's, it just shows why it's just almost impossible, very challenging to just break through these cycles of poverty. But you guys are out there doing that. I'm just so proud to be involved with SELF. And then now.
Yeah, and Susan, can I just really quickly, I think
Sure.
such a good point to highlight, right? Low and moderate income people, working class people, what United Way would call ALICE, right? Asset limited, income constrained, right on the border of they're not poor enough to access grants, not rich enough to access good capital, are not only paying more for capital, they're paying more for housing, for energy, for cars, for transportation. Everything is stacked up against them getting out of that cycle. And the main thing is that all those things that make us able to thrive and to move forward, housing, access to transportation, is that when all that is so expensive that you're just spinning your wheels to pay, the financiers of all that, you're never going to get out of that hole. So
That's right.
really, again, our mission has always been that triple bottom line, right? Economic, social, environmental justice. But it's a huge thing for us to really stay focused on how do we break these cycles? How do we address those barriers? So I just wanted to, that's what.
No, I love that. This is the ultimate equity, empowering people, to take control of their lives and hopefully ultimately to build some wealth, right? If you get a solar system, make your house more efficient and you're paying less money for that electric bill, that's money you can spend to go to school or, whatever, to better your life. So I think it's just amazing. So things really cranked up here somewhat recently with the Inflation Reduction Act and the Bipartisan Infrastructure Law. There are now historic investments happening in clean energy. So we're going to save people money and we're going to protect our natural environment. We're going to protect people's health in their homes, create workforce, create jobs. So let's talk about those historic investments. So SELF is the lead applicant in the Solar for All, which was successful. I know you'll talk about that. And then you're in line for more low interest capital through the Greenhouse Gas Reduction Fund. So why don't you just speak to
Yeah.
both of those programs?
Sure. Yeah, really incredible historic moment. First of all, the climate bill passing after bouncing back and forth. I'm proud to have been at the Senate testifying on behalf of this climate bill back in 2021, highlighting the need, highlighting the fact that 40% of Americans didn't have access to capital to address climate issues and others that we just talked about. So yeah, so here we are, and of the IRA funding, which is like 300 billion plus 300 plus billion, right? There is a specific fund called the Greenhouse Gas Reduction Fund, known as GGRF. Some people confuse it with GGRP, GRPP, whatever, but no, this is GGRF, which is Greenhouse Gas Reduction Fund, which is a $27 billion bucket. This $27 billion bucket is broken in three: solar for all, NCIF and CCIA are lots of acronyms there. I'm just going to say that it is a bucket for investment and low cost debt, and a bucket for more grants and subsidies, 100% focused on low income. Solar for all, the program was designed so that it would flow through states, and that those states would then pass down funding to solarize and to empower low-income communities that, you can't put debt on low-income people to do this. And you can't put the burden on decarbonizing on them either. They're the least pollutants anyway. So, so it was a way to inject capital into these communities that would get left out once again from any other solution that involves capital. So it was the EPA ended up designing what I think is a good program, although complicated, but they rolled out 60 grants meant to go to every state. Florida did not apply as a state for these grant funds, as Georgia did not either, and a couple of other states across the board didn't either. So the EPA provided an option for nonprofits to apply in lieu of the states, which gave us an opportunity to jump in. So we formed a coalition. Actually, this was really prompted more by the Solar United Neighbors group, who reached out and said, how about we apply? We were, of course, already involved in all the GGRF kind of formation, but we couldn't do it alone. So Florida Sun, the Nature Conservancy, and SELF formed a coalition that is called Florida Solar for All, simple. And we applied for these funds, and fortunately, we were awarded $156 million. So, which is, wow, right? This is game changing for, I mean, for so many households. With these funds, we decided to create a program, which basically this is how we won the award, is through the proposal of the program, that would provide about 55% of those funds are for grants and subsidies for low income homes to access solar. The rest is very low cost, small loans that would also allow to rebuild credit and do the financial inclusion piece, and also allow us to create a revolving loan fund in perpetuity. So the idea is that these $156 million will solarize about 7,000 homes or so in the first 5 years. But then, because of the revolving nature of the funds, the revolving portion of it will be small initially, but because we know how to leverage capital, we're going to be able to leverage those funds
That's right.
to
Bring
us,
in.
multiply it 10 times, and do 7,000, 10,000, and over time, continue to solarize low-income households with these very, very low.
That is fantastic. I sort of pointed that out again, right? In the same way that Self's business model, once you have that loan capital out working, people are paying you back and you get to use that interest. So similarly, right? So solar for all for low income, as that is out and people are solarizing, and that will repay into the fund. It just
Right.
keeps going. Is that how that works?
Right, so the principal comes back, becomes a revolving loan fund, the interest is used to pay some operating funds. Again, this is kind of like getting a little bit into the weeds, but the idea is that half of the funds, about, well, not half of the 156 million, because there's operating costs that are pretty high because of the compliance requirements for these funds, which are extremely onerous, but we're ready to face that challenge too. Um, the idea is that the funds that go out in loans, again, is it's about 30%. So 55%
Gotcha.
of the funds go in grants. So
Right. And
0,
that's low income. Nobody has to pay it back. Right.
100% low income. And then there's another chunk that about 30 something percent is low cost loans. And then there's another portion, about 20% for ancillary. And we know that we need to, we can't just go and plop solar on people's roofs. They need some
Right.
ancillary support. So um, the reason why this program was created and to flow through financing entities, nonprofits mainly, is because we are able to leverage these grant funds with additional private capital. So what do we mean by that? We already know that low-income communities may not be ready for solar. So we bring in additional capital from other sources to be able to make those homes ready, replace the roofs, fix up the, seal the home, reduce the energy demand, right? Um, this is why these funds are flowing through green banks or nonprofits with the knowledge and expertise and just track record of working in low and moderate income communities. And I really think that we have a very powerful partnership between the Solar United Neighbors model. They're used to organizing, educating, walking people through the process of solarizing. We embed much of that in our process, but not to the level of detail that they do. So we vet the contractors, everything you heard before. And then and then the Nature Conservancy, which is such a, environmental steward, and they have been uh, so big on land preservation and other things. They are now working in tribal areas and things with solar. So it's a really good coalition. And what we look forward to is working with the local governments, local community-based organizations. Another example of leveraging would be working with Clio to get word out. So so we would bring them in and they would take us out to the communities. And then Centro Campesino, for example, is working with weatherization and assistant programs. So if you think about it, I mean, it's hard to just talk about it like this, and I'm rambling so many things, but the catalytic effect of these funds is really something historic. These funds are unlocking these kind of chains of events, um, empowering these small organizations doing WAP or weatherization, creating jobs, creating education, awareness, solar readiness. All of that is being done at a community level for the first time ever. Not so much top down, but bottom up.
Yeah. Yeah, no, think about it. I mean, you can't export a job helping people get more energy efficient,
Right.
right? Or installing solar panels. Like, you're helping people save money, you're making their homes safer, secure, more secure. I mean, this is just sort of the essence of what we need as humans, right? I would
Right.
say Tom Friedman, the columnist, wrote one time, no one washes a rented car. Right. So when we think about that in our communities and, how we live lives to create equity so everyone can have a safe, secure home that's also effective to run, efficient to run, right? If you have old windows and the air is just sort of going out, and I think it was Doug Coward who once, told me that you could reduce your home as much as a third of your energy bill by having a high efficiency, air conditioner, right? So if you have to finance that for a few years, so be it, because then once you've paid that off, you're getting those savings. So this is what we need for everyone to have.
Right.
And the fact that this capital is coming and what you all are doing, it's just amazing. I don't know if you want to talk a little more about any of the greenhouse gas reduction
Yeah,
funds, or a little bit about your also self-expansion, which has just
yeah.
been happening really rapidly.
Well, yes, I think I want to just inform people that, we not only have the Solar for All funds that are going to be deployed. Again, this is 100% residential and 100% low income. So we will be rolling that out in probably February, just to manage people's expectations. We're prepping. And Sun and TNC will be reaching out, and we'll be working with local governments and other partnerships. And we will also be doing our part, setting up this, everything to deploy. So that's on the Solar for All. On the other buckets, we are looking at, we're coming into some tens of millions of dollars, which I don't have the exact amount right now, but this is all low cost debt capital, but it allows us once again to leverage more private capital. So if we're getting $50 million as an allocation from one of our partners, which we are partnered with all the winners at the top level, um, then we will turn that into 100 million. And these funds are really targeting more of the nonprofit commercial projects. So for example, nonprofits before didn't have access to the ITC. So what are we doing in this whole process? Also unlocking access to things that are there, but hard to access. The tax
And
credit,
that was the investment tax credit. And
right,
that's how we all refer to it, right? You get a tax credit.
right.
Now it's not a credit, but go ahead. It's with the
Well,
elective.
yeah, so there's the credit for those who have a tax liability. There's an ITC, but then there's also the direct pay, which basically is if you're a nonprofit before you didn't pay taxes, so you wouldn't get a tax credit. Well, now you can get that same 30% on a solar system through a direct pay. Historic, amazing opportunity. It also makes us get more creative about how do we play a role as a nonprofit in capturing those that direct pay and passing it down to households that have limited income, right? So reducing even further the upfront costs of this. So we have a couple of products that we're developing as we speak. One is the commercial loan product, solar loan product. Basically, we are going to be able to partner with housing developments that want to go like the full, green route, meaning really ensure that they're installing high efficiency air conditioners and doing all the weatherization installation and getting solar ready or doing solar. So we would come in with low cost capital to finance those pieces, or in a smaller scale, we'll finance the whole building of new housing, for example. Um, we also are going to put out a bridge loan for the tax credit or for the direct pay. So for example, if a developer wants to do workforce housing or affordable housing in a smaller scale, wants to solarize, they don't want to wait, 3 years for the tax credit. We'll finance that. We'll finance that bridge. And so it makes sense for that developer or landlord. The retrofits, like, what do we do about rentals, right? The renters don't have any power of this. We're creating loan products that are attractive for landlords to make these investments to improve those homes, solarize, decarbonize in a way that makes financial sense for them. So they get tax credits, they get depreciation benefits, they get additives. If it's low income, you get another 10, 20% tax credit. So in the end of the day, this is, again, you know, through financing, we can really kind of address these issues. It's not easy. And it's not easy in Florida where we don't have a lot of incentives around these things, right? So one of the things that we're looking forward to is also building in building in rebates from the HERO program that the state energy office applied for recently, but they're still waiting. So we're trying to stack up all those benefits to make things work. In a
Yeah.
nutshell, though, we'll have capital available for commercial solar loan projects that may be put on churches, on hospitals, schools, um, daycare centers, but also just affordable housing or workforce housing. And by the way, EV charging, of course, embedded in these developments. So
Sure.
um, so that's coming up soon in the next couple of months. We do have pipeline, and by the way, we have on our website. You can scroll down and see SFA or GGRF, and get your kind of your project in the pipeline.
Yeah, I think that's so important. And I'll underscore that. So the Florida Energy Office is housed in the Department of Agriculture and Consumer Services. And states were allowed to take their money that was allocated, in Florida's case, $347 million in energy efficient appliance
Right,
rebates. So
right.
that'll all be on the self website so people can access that, especially, I'm a hurricane victim myself,
Yeah,
and everyone is going to have new appliances. So that will be useful, of any income, to get those appliance rebates when that comes. So I love that we're looking at all these different pieces. And you've mentioned one of your partners, the Solar United Neighbors. They run a real solar co-op, and you join the co-op for free, and you can get all this information because people have lots of questions about solar. And it's unusual because every roof is different, right? How is your house situated? Is your roof in good shape? So Solar United Neighbors son has been out there for a while, holding, sessions and educating people. And so that's been exciting. And they've really built sort of a solar army of people who either have solar or who've looked at it from a policy point of view. Because you mentioned a couple times that Florida, is not a friendly environment. In fact, because we have outsized influence of these big utilities that, fundamentally based on their business model, aren't looking to sell less electricity. So it's a bit of a problem, and we haven't had the kind of rebates and programs. Earlier, I actually wanted to query a little bit, because when you talk about Connecticut has their own green bank, and so thankfully you are there, Self is there, to pick up some of that slack. But the fact that the state of Florida, in so many regards, is on the sidelines, not helping people get more efficient. Just our energy efficiency, every 5 years, we set conservation goals at the Florida Public Service Commission. In the last round, the American Council for an Energy Efficient Economy ranked our biggest utility, Florida Power and Light, 52 out of 53 utilities in the country in offering efficiency programs. Tampa Electric is 40 out of 53, and Duke is 47 out of 53. So our policymakers, the governor in this case, appoints the Florida Public Service Commission. And if they're not doing significant energy efficiency, it's because our elected leaders are not requiring that, and they could. So thank you, to Solar Energy Loan Fund for sort of stepping in, and Solar United Neighbors for filling in these gaps that other states, have done for many, 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 many years. So anyway, can you speak a little bit, because we'll get wrapping up
yeah,
here, but about your expansion? I'm so
yeah.
excited to see Self moving into all these other states.
Yes, and before we move out to other states, I also just want to highlight that we also are looking at agrovoltaic and agricultural and rural projects. So just making sure that we're not leaving any of these
Yeah, that's great.
marginalized communities and sectors out. So yes, reach out if you have more questions, but we are working on developing really all these GGRF programs right now as we speak.
That's
So,
fantastic.
so expansion is interesting because again, what we realize is that not only Florida, but many of the states, especially across the South and the middle of the country, did not have green banks. So Self is really the only nonprofit green bank established way back when with a track record. So we launched an initiative of a climate equity accelerator a year and a half ago to kind of provide technical assistance and try and help seed those other green banks that were starting to emerge at the onset of these GTRF funds, right? But like us, they lack support or funding from the state. So what we decided was that our Green Home Loan Program, which is a proven methodology to provide capital to low wealth communities and households, we would package that, it's our proprietary underwriting method, in a plug and play model, which is a platform that we don't refer to it as a software because it really is not a software. It's a platform that allows any lender that has the same mission and the reach and a couple of other things, to plug into our back office, not have to spend the millions of dollars in 10 years that it took us to perfect this, as perfected as it can be, to perfect this model, and tap in, and we do all the underwriting, we provide the methodology, we train them on how to recruit contractors, we provide the contractor portal access. So it's kind of in a box where if you don't have capital, because you don't when you start up, just like when we were starting up, we didn't have capital for this. How do you start deploying capital? So we came up with a solution, which is a plug and play green home loan program. And through that plug and play, we're able to offer a white label. So we're just in the background. Other entities can set up their programs with their own, face and logo and whatever. And we just provide that kind of the whole office, the whole setup, and including capital, right? Because they don't have capital. Nobody will give them capital because they have no track record. So through this plug and play, we are now in 11 states. I want to mention our first few plug and play partners, and Doug Coward and Annie, who are leading this effort, and they're wildly successful. But we started with Nevada, so it was going to be focused on the South and then kind of went west, and then the need is burgeoning. So we started with North Carolina, Texas, Nevada, Tennessee. We just signed on Virginia, Maryland, Puerto Rico, and Arizona. And so I could go on, but really what I want to highlight is that, for example, the Texas Clean Energy Fund, they started with nothing. They now have a few grants, but paying a loan officer, setting this up. So we raise grant funds, and yes, JP Morgan Chase has been amazing in supporting this effort. And they gave us grant funds to set up the plug and play model and offer all of this for free for a couple of these organizations to pilot this for a year or two. So they didn't have to pay the upfront costs. We raised capital to customize, build out our systems, invest in more technology. And Texas just closed almost $600,000 in solar loans with our plug
Wow.
and play model, which otherwise they couldn't have done because they can't get capital. So the idea is to set up the organizations and help others in the space deploy capital without having to reinvent the wheel, and then facilitating the deployment and expansion of capital. So
It's just so amazing. And you're helping people save money, making their homes secure, and you're putting people to work
yeah,
right there in local communities where those dollars, generate economic development all across the board.
and supporting new entities in the space. So the whole purpose is we crowd in more capital, we seed more organizations, everybody starts deploying capital in this regard. So again, GGRF funds will flow through credit unions. This is going to be a big influx of capital, but we want to make sure nobody gets left out. And there are always these gaps. So we're there kind of filling those gaps. But for me, it's really exciting to just be a part of seeding the ground and seeing these nascent green lenders emerge, and then seeing CDFIs, who traditionally do business lending, affordable housing, also start intersecting those activities with climate. So honestly, our our hope and the vision is that what we do becomes mainstream one day, and that we are relevant and we survive because we just do it well, better than anyone, but that's the goal.
That's just great. So is there anything before we wrap up that maybe we've missed that you wanted to add to the conversation? I just love that we're talking about affordable financing, mission driven, no one, it's unsecured. No one is ever going to lose their home because some unscrupulous person, and I would love to outlaw unscrupulous behavior. I don't think anyone has figured out quite how to do that. And it's just mission driven, and it's just fantastic. And
Yeah.
then the whole sort of self-sustaining aspect of it just makes it just brilliant, really. So anything that we missed that you want to talk about?
No, maybe I'll just end with maybe a story or two. Uh,
Right.
so I like to talk about Caroline. I wish I had a picture. Um, an 80-year-old widowed beautiful woman living in the Treasure Coast. And she had back surgery, and her AC was one of those old window ACs, was not working anymore. And she shows up in our office with a friend of hers who says, and she was wearing a back brace, this tiny little woman. And she
Mm.
says, her friend says, we have gone everywhere and nobody will give her a loan. And Caroline has fixed income. She's on her social, she doesn't have a mortgage anymore. She owns her home outright. And they told us you could help. We were in the office that day, because now sometimes we're hybrid, right? And next thing you know is I hear just like this wailing, and Doug was there too. We all like rush over to the front office, and here is Caroline, who is hugging our loan officer in tears, who had just gotten approved for her loan to replace her air conditioner. Something so simple and basic for quality of life in this state and in so many states. And for an older person who had all the capacity to repay a loan, to not be able to access capital unless it's through a predatory lender that wanted to charge them like 300%. And, these, it's heartbreaking. So that story where we walked in and then she gave us all hugs and she cried and she thanked us. And then she had a big smile. We have this big, beautiful picture of her. Um, that is why we need to do this. I mean, in the end of the day, the intentional consequences of our work are to decarbonize and to reduce carbon emissions and global warming, because we're all part of this, right? But on a granular level, we have to start at the home, at where people thrive from and live from. So that's the kind of work that we live for. So that's what I want people to remember when they're thinking of climate. We're thinking about the impact of human lives. Yeah.
Well, I am so grateful that you and Doug Howard and your whole team, have the level of devotion that you do, the creativity to, kind of figure out, innovative ways to address these needs that it's just been unmet for such a long time. And so anyway, I'm just proud to be a little part of it, and what you're
Part of
doing
it.
is nothing short of amazing. So everyone needs to visit Solar Energy Loan Fund's website, and there's more information. And we're accessible. So Tuan, thank you so much for your time today. And I just very appreciative to the Vola Foundation for the opportunity to sort of have this conversation and share it with lots of other people. This is something today that local government officials or networks through churches can access. If you know someone that needs a new roof or new air conditioning, I mean, and that's what happens, right? The contractor comes out, someone needs the new AC, they can't afford it. And so, Self does it puts a lot of energy into educating contractors so we can help people in these desperate moments, which with our warming planet, more sea rise, more intense storms, hotter. I mean, we just break one heat record after another. So all of this is even more important. It was always important and always a need, but it is more and more and more important. So thank you so much. We had a great time chatting. Good to see you, Dwan. And
Thank
thanks
you
again.
and
Happy Florida Climate Week.
yeah, and thank you for all your service and everything you've done for all of us in this space as well. So thank you and have a great day, everyone.